Hello again. If you are just joining us or haven't seen me yet, I'm Shakina Tawahene, Commercial Editor at Mortgage Solutions. Welcome to this session. We're glad to have you with us and hope you're finding today useful and interesting. This session will be held by Pepper Money, and we're joined by Paul Adams, Sales Director, who'll be talking about ways mortgage administrators can build and develop their personal brand. As always, there will be time for questions afterwards, so feel free to ask them on the box on your screen. You can ask them while the presentation is taking place, and they will be answered once it's over. I'll now pass over to Paul to begin the presentation. Thank you.
Hello, everybody, and thanks for joining me today. I'm gonna share my screen in a moment and walk you through in the next sort of 20 minutes or so. So I leave time for questions at the end. A set of slides that I hope will just bring to the surface, I suppose, the key roles you play, and I'm full of admiration for everything you do. You often hear mortgage administrators being badged as the unsung heroes, and I think that's so true. And I think without the work that you do, I think the pace of our industry would suffer. Lenders would suffer in terms of getting the wheels in motion and pushing cases through at speed. And I think customers also. I think customers. And we purely wouldn't be able to write the sort of levels of business that we're seeing in our market today. So I think that's probably the thing that I'll start with. But let me share my screen, and we'll begin. There we go. So focusing in on personal brands and the evolving role of the mortgage administrator. The agenda I'm going to walk through is I'm going to briefly talk about customer loyalty, and that if this was like a pack and this was the exec summary, customer loyalty would be the one that I'm going to start with, and I'll probably end with, because I think every business in the land wants to generate loyalty from customers, and I think people who work in those organizations either see it as part of their role or not. But I think it's everybody's responsibility. But I think as a mortgage administrator, given that you're in a position where you're very much holding a customer's hands right the way through the process, you have the ability for to gain that loyalty from a customer and give them the experience that means they want to come back time and time again. So we'll touch a little bit about that. And then I'm just going to walk through, how the market's changing, how you can sort of grow your knowledge and build stronger relationships, and the importance of your own personal brand, with your customers, but also across the industry in general. And how if you're interested in development and nurturing your own talent, ideas and thoughts that I can share with you that you could talk to your employers about in how you may do that. But if I start with customer loyalty, so four brief elements to this really in my mind, and I think all of these are important to pay attention to individually, and just think about what you're doing and how you're doing it, I guess. But being a pyramid, you kind of got the foundations at the bottom. So availability and accuracy, those are key, fundamental expectations from any customer. So when a customer needs help, and I'm just taking out a mortgage, and without the mortgage administrator that I'm working with, I don't know what I'd do. Even though I know the industry, it's been stressful, it's been long-winded. I've been relatively calm because I understand these things and how it works, but a typical customer doesn't. And the most important thing for me was that the person that could update me or fill me with confidence or calm me down was available to me. So I think your availability, both from a reactive point of view, but also how you choose to be proactive in keeping customers up to date and up to speed with timelines, etc., and lenders, it is critical. So that word availability is around reacting and proactive. So that's important. And obviously, the information you're sharing with any party, whether that be a lender, the brokers you're working with, and indeed the customers, it's important that that's accurate, because when it comes to mortgage and mortgage underwriting, a lot of it is devil is in the detail. So that's where I take my hat off to you guys, because I think you have to be so all over, lots of intricate bits of detail, and you're managing lots of cases all at once. It's, hence why I think it's a phenomenal job you all do. But the reason why they're sat below that red line is really what that does is kind of, that's the expectation of everybody that works with you, I suppose. And let's talk about customers in the main. So all that does is prevents them being dissatisfied with the service that they're getting from your companies. And that's the same for lenders. I talk about this pyramid to my team all of the time, because I think if we get these 4 things right, when we're dealing with intermediaries, then we're not going to go too far wrong. But then I suppose the top 2 are the bits that then really create that advocacy. That this sort of stuff will drive that customer walking away thinking, that was brilliant. The way I've been managed, I'm calm. I'm going to recommend this firm to all of my friends and family. And my mortgage is completed and I'm happy. And it's kind of, often it's about how you make people feel. You often hear that, don't you? When you've put the phone down from somebody, it's how have you left that person feeling? So it's just thinking about things that you can do day to day that really brings about that sense of partnership with, the lenders, the BDMs. But again, mainly for you, I would say is the customer. So you're almost working in partnership with that customer to achieve the results that they want to achieve, given the advice that they've been given. And then the top one, I use the word advice, and I don't mean that from a regulatory perspective, in terms of the advice that the brokers and the mortgage advisors are giving that you're working with. But it is kind of, so probably a better word is guidance. I think people become very loyal to people that they learn from, that they're picking up tips. And that is a really key fundamental part of customer loyalty. So along this journey, if there's things that you can talk to a customer about that's meant that at the end of that conversation or at the end of that process, they've learned something that's going to help them in the future, and help them understand this whole thing about mortgages, because not everyone does, then I think it gives you a really good advantage to stand out from the crowd, and it will give your business a competitive advantage too. So I think availability, accuracy, how you bring about that sense of partnership, and the guidance that you give, are fundamental to the role that you play. But it's fundamental to the role I play, all of the people who work in Pepper play, and it really does support customer loyalty. So hope that makes sense. Give you a bit of food for thought, I suppose. But we're in a difficult time, and I'm sure. I mean, I work for a lender, but you have to work with all the lenders, and we're all really different. We've got this amazing knack at all changing things at different times. Sometimes it's the same thing that we're changing, but we're changing it in all different ways. And I often say this about the broker community. It amazes me how well they kind of take note of the changes, remember those changes, and that can form part of the advice that they continue to give to customers. Because keeping on top with such a fast-paced industry it must be just so difficult. And that's not just limited to brokers. I think that's yourselves as well, particularly when you're dealing with lenders. So at the moment, the sort of the bullet points on those screens, I won't go through them all, but they'll all be very much playing a part. I think service levels across the lender community are varied. I think there's some that are very good. You'll know exactly who they are. There's some that are really struggling at the moment, and I think from that perspective, it relies on you to manage customers' expectations. I can imagine that's not a very easy conversation to have, and I think some lenders will be relying on that, and that sort of access into websites where you can see service levels from various different lenders, is really important for you to have access to, and to help you to set those expectations with customers. I think there's definitely a growing need for specialist lenders. So it wouldn't surprise me at all if you're finding more of the not to say more of the lenders, because the mainstream market will always be bigger, but there was a migration or a change in the types of lenders that you're dealing with now. And that'll be coming from a place of, the world's changed. We've had COVID. We're now into a period of rising inflation and cost of living increases. and and these things present a challenge for some customers. And through that COVID period, many customer circumstances changed. They became more complex. Their employment status may have changed. So you might have people that are very short term employed, or might have gone self-employed, but only for a short period of time. And sort of lots of things about customers, including their credit profiles, have become more complicated. So what we're seeing from Pepper Money's point of view is that there might be elements of criteria, which means they're not able to sort of go into the high street and get a mortgage as easy as they were. I would imagine there's lots more cases whereby they might be going into a mainstream lender, but they're kind of coming back out. They're either being declined at decision in principle or FMA. But we're certainly seeing an increase in inflows to us based on individual points of criteria, but in the main, I would say credit score fails. And I would imagine, again, from your perspective, that can be frustrating, because I don't know where our industry would be without credit scoring, because it allows lenders to process mortgages very, very quickly, sort of reduce some of the paper trails and paper flows that are required to evidence various different things. And it's a really good, sophisticated way for lenders to assess risk. But it doesn't fit everybody. So there'll be lots of cases whereby they might be failing credit scores. You won't always know exactly why, which can be frustrating, particularly when you're having to try and explain to a customer. But that's where lenders like Pepper Money and some of our peer lenders are here to support you. They can come in at the top tier of our product range. The processes and kind of paperwork requirements are fairly similar. So I would imagine part of your challenge at the moment is getting used to dealing with maybe lenders you've not dealt with before. But we're here to help. So, you just need to keep talking to us, use all the sort of the teams that we have in place to help you and support you to get things right first time. And that's where I think lender BDMs, particularly in the specialist market, will be a big asset to you, just to understand those nuances of process and what to do and what not to do, etc. And then I suppose finally, lender rate changes and limited notice. I think we've seen a spate of this over the last month or so, whereby lenders are having to increase pricing because of the way the money markets are moving. Swap rates are changing, and they've gone up quite significantly. Although this week, you'll be pleased to know, it seems like they're coming back down the way. And look like they may be stabilizing. And I think you'll find less changing once the swap rates have stabilized. But I think over the period, again, you've had lenders withdraw pricing at very short notice at times, which again would be, you working late, you trying to key on those last minute decision and principles purely to secure your customers the interest rate that they want. And I can imagine that's brought quite a bit of stress into the roles that you do. And I suppose my message on this is that, from my perspective, whenever I go out and see a brokerage firm, I'll spend time with administrators, because they'll generally tell me where we're good, where we're not, what they'd like to see improve, things that frustrate them and get in the way of the customer journey. And I take as much from those conversations as I do when I talk to the mortgage advisors. And so what I'd say is, never stay quiet. You have a voice, and that voice in our industry is really important, and lenders want to know it. So, if there's any feedback that you want to provide to any lender, provide it, because I think sometimes we assume everything's good, and it could be the smallest thing that you can recommend that we change that makes a huge difference across everything we do. So take that upon yourselves to do that. Very quickly, I think, and it probably just plays to what I've just said there about gain authority through knowledge and build stronger relationships. I suppose that's where, you can create yourself a relationship with all of the lenders you deal with. And it could be at the BDMs, it could be within the service centers or the underwriting functions, where you can provide that feedback. Because, I think lenders generally want to be supportive. And the important thing for you is that you'll want consistency. You want every lender to be transparent. Obviously, you want us to be accessible, and efficiency is key to us all. So I think along those four themes, you'll within your own businesses, you'll be thinking of all those things, and you'll be coming up with new ways and new processes of how to sort of keep the plate spinning, keep everyone happy, and I think about that in terms of lenders, and give us your views, and tell us the ways in which we can very much support you. And that's certainly one way in which you can raise your own personal brand and your own personal profile in the industry. So I suppose the obvious ones in terms of learning and gaining knowledge, and I think across the marketplace there'll be some administrators that want to be brilliant administrators, maybe start leading a team of administrators, or just carrying on doing the work that they do but even better. And there'll be some that are in this industry to kind of progress, the sort of the eye on, I'm going to be the next mortgage broker within the firm I'm at, or another firm. And so the thing I love about our industry, there's so many different roles that all add value, and there's so much opportunity. And I think that building your network can really help open doors and kind of open your eyes to what's there. But I think knowledge is really important. So there's many trade publications out there, which if you've subscribed, you probably get emails 3, 4, 5, 6 times a day with various different news stories. And we're all time starved, and sometimes these things are hard to read and digest. But even if you were to put an hour in your diary every week, or half an hour every day, or even 15 minutes, when you arrive at the office and you're having your coffee or what have you, just flip through some of the trade press and read some of the the stories and the updates and the things that are taking place, because I think it will just broaden your landscape and kind of get that sense of what's going on. Definitely spend time with BDMs. I've worked for a number of lenders now. I was at Santander prior to Pepper Money. I was with Santander for 10 years, been with Pepper Money for 4. And the one things that we've always talked to BDMs about is our ultimate goal is for brokers to get things right first time. If we could get a perfectly packaged case into Pepper Money that allows us to kind of touch it once and away we go, it's kind of done. That is the ultimate. But to get there, that's a lot of education, because we'll have our own little way of doing it, as will other lenders. So we want our BDMs to spend time with people such as yourselves that are so important in that whole journey, so that you understand the sort of the key things that are going to make the difference between an offer that's 30 days or an offer that's going to be 10 days or less. And we very much take it upon ourselves to empower the BDMs to spend time with you. So try and carve out that time if you can. And I'm sure particularly with some of the newer lenders that you're starting to deal with now, you'll find it extremely valuable. And there are, I don't know if any of you have looked at the LinkedIn Learning. This is just an example, but there's so many different online training opportunities. If there's certain parts of the industry that you have more interest in, that you want to know more about, or even if it was just a skill set, I want to be better at PowerPoint, I want to be better at Excel, I want to be better at various different processes, or a personal attribute like I want to be better at delegation, or taking criticism, or dealing with a difficult customer, those types of things, then there's some excellent content available. But again, we've just run a variety of culture workshops within Pepper Money, because we're keen on sort of people, culture, and how people are feeling. And the one thing that's come out a lot is carving out time for people to actually learn and develop and take on board these kind of these skills. And I suppose it's on us individually, it's on us as managers of firms to sort of try and carve out that time. But I think it's on the individual. I think there's nothing stopping anybody developing and progressing. It's just dedicating a bit of time to it. So I think search out some of the online stuff, and particularly I can recommend LinkedIn Learning, because we work with them, and you can carve out your own sort of mini sort of training modules that are based on content and 5-minute video clips and all sorts. It's extremely comprehensive. And then in terms of building your own brand, I think my final point there about being memorable, I think that's important for us all, really. It's kind of leaving your mark. We're all different, we've all got our own personalities, and I always think we should always bring those personalities into work. and because that's the thing that helps differentiate us from one person to another. So I think try and be memorable for the right reasons in anybody that you deal with. But a lot of building your own brand is around networking and becoming known, and that's where I think if you get the opportunity to post things into LinkedIn as an example, it could be key successes, key customer outcomes that you've been fundamental in terms of generating, and sort of to raise the whole profile of, I think, the roles you actually have in the industry as well as you as an individual would be a good thing. And I think you'll find that lots of lenders would like your comments and your stories. Whether it was about that particular lender or a competitor, it's I think good news is good news, particularly related to mortgages. And then of course you've got the industry awards and kind of the expo events where in one room, you've got most of the lenders represented at any one time. And as mortgage advisors would, they're working around the room, asking questions, finding out, what's changing, what's not. So, see if you can get yourself to some of those events, because, they're phenomenal in terms of knowledge and just understanding what's going on and carving out new relationships with people that can help you. And the other thing is and I'm sure I feel like I'm preaching here, and I don't mean to, but it's taking ownership of where you want to go with your career. So clearly there's stepping stones and other roles in our industry that are all enjoyable and good, and depends where you want to take your career. But think in terms of your own business that you work for now. I think delegation. So if you can actually take some more work off of somebody else to actually learn by doing it, can be a good thing. Even if it was for those who are wanting to be the next advisor, taking a customer scenario and working through all of the advice process, look at the sourcing engines, look at the criteria systems, and see if you can formulate what the advice to that customer should be. Clearly it would need to be checked and kind of gone through again by an advisor with that firm. But it's almost, sometimes you can only learn these things by actually doing it and learning whether you think that role would be right for you. But so I think try and take a bit more away from somebody else in terms of what they're doing, if it's an area that you're interested in, because learning by actually doing it is sometimes the only way. And secondments are often good, or becoming a champion of something. So it could be that the firm you work for are starting to see more specialist business come through the doors, and lots of customers calling that need more of a specialist solution. And you could become the champion for understanding 3, 4, 5 different lenders' criteria, their processes, and almost be the champion or the source of knowledge for a particular segment of the market. So that's just an example and just an idea, but it's kind of thinking about where you want to head, and then thinking, right, from what I'm doing today, how can I gain the experience in doing certain things and have exposure to new bits of information I don't really need today to actually do my role, and use that to decide whether that's a good direction for you or not. But yeah, I think try and learn as much as you can. And then my final slide is a thank you, really, because we at Pepper Money, we are I was lucky enough to present an award actually to Erin Cornthwaite, who won Mortgage Administrator of the Year at the Mortgage Solutions. And we talked a lot, and she was sat next to me at dinner, and we talked a lot about the role. And it is really, really clear that lenders rely heavily on I suppose the ownership that you take on that customer journey and the knowledge you have. So if we can reach out to you throughout the process, and because often advisors aren't as available because they spend lots of times with customers and etc., and we can get the answers and get the paperwork really quickly, we can deliver much better service turnarounds, etc. And and I think what we've tried to do in Pepper Money is give you direct access to our case owners, so that if there are questions you have or information you want to provide, you can ring and you can speak directly to the person that's managing your case from end to end and underwriting that particular case, and that's been a fundamental change that we've made. So that helps you to be proactive and helps us to make quicker decisions as well. But it's kind of trying to work out how you can position a case or put a case on our conveyor belt start of the journey with all of the documentation along with it, or at least all of the decision making documentation, the information we'd need to even start looking at the case. That's probably my biggest ask is that, because that helps us to start the journey in the right footing. We'd always call you on day one anyway, to say that we've got this case, we're about to assess it. Is there anything else that you want to talk to us about? I can see you've sent X, Y, and Z. It'd be great if you can follow that up with, this, and this, so that sort of conversation happens up front. But by doing that for us, day one, it takes days out of the process. I can promise you that. And I would imagine some of those lenders that are behind at the moment, and SLAs aren't in the sort of where you'd expect them to be and where they'd want to be, they would be saying exactly the same thing. So 1 in 4 of our customers we offer within 14 days. That doesn't mean to say that the 3 out of the 4 take forever, because they don't. They follow shortly afterwards. But I think as a specialist lender, you expect the process to be a bit more difficult and a bit more long-winded. And I would say it isn't, and it doesn't have to be. But a lot of that is how we work with you. We partner up, that the word partnership, to make sure that the journey starts in the right way, and obviously things can happen a lot quicker after that. And through the good work that you do, we're able, despite the fact that a lot of the customers we see are fairly complex, we are offering 80% of the applications we receive, which I think is great. So clearly, the advice that your advisors are giving, followed up by the way you're then interacting with us through that journey, is a positive one to get us to that 80%. So I think that's all I was going to really cover. But we can open it up for questions now, and I guess over to you.
Thank you very much, Paul. I hope everyone watching found that insightful. We do have about 2 minutes for questions before we go for the next comfort break. So I'll go to the first one. You did mention a little bit about how those in the mortgage advice side do sometimes join the industry as an administrator. So how can someone who's newer to the industry raise their profile and be seen as competent in their role?
I think in terms of becoming the next mortgage advisor,
and just generally raising their profile and becoming better in their jobs and furthering themselves.
Yeah, I think again that comes down, a lot of that comes down to knowledge and that proactive way in which you can get exposure to various different people. So through the whenever we have a continuous improvement form that runs within Pepper Money, and it meets every single week, and on the table are all the bits of feedback we get from anybody, administrator, advisors, solicitors, that help us to improve things. And there are a number of people now that I've built a network with that are always providing that feedback, and therefore I go to them when I want to know something. We're looking at improving this process or that process. What do you think? And at least half of those are administrators, because, like I said in my presentation, they're kind of better placed to have an opinion on these things than anybody. So I think it's about being proactive and kind of carving out relationships with people that you think are important to have relationships with, which is easier said than done, and a lot of it comes down to time, but it will help you in the long run.
Thank you. And I think there is time for one last question. So for a mortgage administrator on the flip side who's been in the job for a while and potentially feel stagnant in their role, what can they do to rebuild their confidence and motivation and refresh themselves?
I think it's interesting, isn't it? When you've been in a role a while and you kind of get into that point of feeling like I can do this stood on my head, it doesn't challenge me anymore. at that point in time, it's either I need to change my role or reinvent it, and reinventing it can often be the right answer, because you can continue to be what you're really good at and actually what you like, because you took the job in the first place. But reinvent it in terms of having more responsibility, diversify a little bit more, and I think that's again, to take ownership of that, and speak out and talk to people around you on how you can do that. That said, I genuinely think as a mortgage administrator, it is a perfect gateway into advising, but it's also a perfect gateway into working for lenders. Whether that be in like an operations position, an underwriting position, because of your attention to detail and your understanding of risk, but also BDMs, telephone BDMs or field-based BDMs. The industry is so vast in terms of roles, and so it's kind of not being blinkered and seeing it as that big opportunity out there, and kind of getting yourself ready for your next challenge.
Thank you very much for your answers, and that is all that we have time for. So anyone who did submit a question that we didn't get around to answering, Paul could come to you after the session and answer that for you. And the next session is at 2 p.m. and that'll be a fireside chat going over the day in the life of a mortgage administrator with LGIM Finance and a buy-to-let broker. And that is it for today's session. So thank you everyone for joining us, and thank you, Paul, for your presentation.
Thank you, Shakina, and thank you to you all. Carry on, keep up the good work.